Welcome back. You're watching Traders Corner, and joining me as always is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, we'll start off talking about the S&P 500, which is potentially going to start looking interesting, especially given what's happened to the NASDAQ and the tech stocks. Yeah. And I wonder if there's going to be a bit of contagion with the broader US market.
Yeah, it's interesting because what you refer to with the NASDAQ is that a lot of those tech stocks kind of hit a wall on Friday evening. The FANG stocks, so Facebook, Apple, Alphabet, which some call is Google, N is Netflix, and then the G is also Google again. So, and Amazon is the other one, which I left out there. So anyway, those are the major tech stocks, the FANG stocks in the US. And on Friday night, they did all have a massive sell-off all of a sudden. Having said that, the sell-off was bought into on Monday on fairly big volume, but it definitely did look to me like that tech rally has been sort of stopped in its tracks for the time being. And we did see a bit of volatility on the S&P 500 as well on Friday evening. If you have a look at the chart over there, you can see that broad candlestick pattern that I'm identifying over there now. That was Friday night's trade, and the S&P 500 traded in a pretty big range that evening. I think it was about more than a 20-point range. It was about, in fact, nearly a 30-point range, which for lately is like a massive range for the S&P 500 to trade in such a broad range. And it is interesting. Also, what's interesting to note is that there seems to be some negative divergence emerging on the RSI at the top here, which is an indication that the buying momentum or the upward momentum might be running out of steam, and that maybe this is just telling us that there's a bit of a consolidation to come here. So, that's how we see the S&P 500 at the moment. Having said that, while it's above this 2,400 level, that was a big technical resistance that it had to break through. It did break through, and it's managing to hold above that level. But who's to say it doesn't come back down towards that area and try and test the support again in the weeks ahead? So it'll be interesting to monitor this in the next little while, but it does look as if a little bit of additional volatility is creeping in here.
Garth, before we talk about our own market and about the option structure that you have, which is well in the money at the moment, given what's happened to our own market, I did share a link from the Financial Times yesterday with you, talking about how they suggest an options trade against the US markets on the basis that the VIX is so low. And you seem to concur with that. And I was wondering if maybe it's something that you would consider again, because you have taken options against the S&P before.
Yes, I have, and it is something I would consider again, most definitely. What you were referring to is the fact that the VIX, the volatility index in the US, is very, very low. It currently trades at around about 10, which is an incredibly low level. The last time we saw it at such low levels was on a consistent basis was back in 2007, and we know what happened after that. So I do think that one needs to be careful of being too complacent in these markets. And the article that you shared with me was basically saying, yes, while volatility is this low, it effectively means that buying options protection is actually quite cheap compared to what it historically would be, which is 100% right, and I agree with that. I think that buying options protection at the moment on the US markets with the volatility levels as low as they are actually does represent a reasonable opportunity, I think.
Well, you are protected, or if not a beneficiary of the pullback in the local market. Yeah. But I suppose the caveat is that this has got a ways to trade out. It expires in September. So just talk us through how you're actually now placed as a result of the Top 40 option that you enacted, what, 2 weeks ago?
Yeah, 3 weeks ago. This is a chart of the Top 40 future that we've got over here, and then on the right-hand side there, that is the diagram of our put spread option structure, the payoff of that structure. So quickly, just to look at the technicals on the Top 40, I did mention 2 weeks back that it looked like there was a head and shoulders pattern forming on the index over there, and that if it started to break down below 47,500, then it would open the way for further weakness. Well, we've certainly seen that. If you ever needed an example of how the bull climbs up the stairs and the bear jumps out the window, this is about as good as you're going to see, because notice that it took us the better part of 3 months to make those gains, and it's given it all back in 3 weeks. The nice part is, as you said, we put an option structure on. In fact, I mean, it was just a luck, I think, more than anything, but I managed to actually pick the very high of this rally when we put that option structure in place. And I went long of a 48,000 strike put, and then sold out the money puts at 46,000 and at 44,000. And it gave us that payoff that you can see on the right-hand side over there. Now, obviously, the market has fallen quite sharply, and it's actually fallen beautifully into that sweet spot for us where we reach our maximum profit objective. There was a little gap in the chart of the futures there at 45,200 from late March. that gap has now been filled, and today as we sit here, it looks as if the market is probably forming in what we term an inside day, where the daily range that we're going to see on the top 40 today is inside the prior day's range.
Okay.
And that often can indicate stability, and it can indicate a potential for a reversal, which I think is quite feasible at this stage. I mean, we're very, very oversold here. That gap has been filled, as I mentioned. So to expect a bounce from these levels is not probably an unreasonable expectation. But like you said, this option structure that we've got is looking wonderful at the moment. But the way I've laid it out there with that beautiful linear payoff, that would only come to fruition at the September futures closeout, which is still 3 months away.
So it's like looking at a large, delicious ice cream through a glass window and not actually being able to eat it.
It is kind of like that at the moment, yeah. But what I can do is I can trade around the structure, and I can try and lock in part of that profit. So, I've got to be cautious of trying to be too clever, because you can do things that then increase the risk at another level.
Which has happened before.
Which has happened before. I remember about 2 years ago, we had a scary moment with one of these structures where it fell into what I always term the danger zone. And it wasn't much fun. So I do need to be very careful about how I trade around these things and try and protect the profit that we've got in here. But what I've done today is I've gone long of 2 ALMI futures. Now, an ALMI future is like a little baby future, as opposed to your normal future on the top 40, which represents 10 Rand per point. Your ALMI future is 1 Rand per point. And so I've done 2 of those at 45,415. So what it effectively means is that I've gone long with the 20% long position against my option structure.
Okay.
Right. And it changes the payoff profile on the right-hand side there. So if you watch carefully, have a look at what happens when I click my mouse, and you can see how the payoff changes on that structure. Now, instead of it being that sort of almost like a sideways table mountain kind of a thing, it changes the shape of the payoff somewhat. At 46,
I don't know what shape that is, but it looks better because the red bit is very small compared to the green.
A couple of triangles packed together, I suppose you could say. But anyway, the point is that now it doesn't matter what happens. As long as the market remains sort of at these levels or higher, we will make some money. Even if it goes lower, we'll still make money. The danger zone comes in below 42,700. That's where we would possibly start to lose money on the structure. So my feeling is that I'm long of the ALMI futures here, looking for a bit of a bounce in the weeks ahead. If we get that bounce, chances are we'll actually take that profit on the ALMI futures and then leave the options to carry on doing their work. And what I like about having this is that these options, they'll continue to sit in the background for us and continue to provide us with downside protection throughout the rest of this quarter.
So does that mean that you can essentially, if you do well out of the ALMI futures that you've taken a position in, you can actually cash them in?
Yeah.
You're not time-bound to the same extent that you are by this in the option structure against the top 40.
Correct. The ALMI futures I can trade in and out of at any time. There's no limitation in terms of that. Just note that I've done June ALMI futures here, and the June futures closeout is this week, Thursday. So on Thursday, I'll roll those forward into the September futures closeout contract.
Okay. So quite a lot of interesting action around the top 40. Garth, what about recent trades on individual stocks that you've undertaken?
Yeah, so Sibanye Gold was the one that we did last week for the show. And what I said at that stage was that the share price of Sibanye had come under significant pressure because of this rights issue that they did. It was a 7-for-9 rights issue. So for every 7 shares that you owned, you qualified to get 9 rights, which then enabled you to buy new shares at 11.28 Rand per share. There was a huge amount of pressure on those rights in the market, so that kind of dragged the whole share price of Sibanye Gold lower with it. And you can see that into late May and early June, we've seen that pressure. But I did say at the time that was most likely a short-term dynamic that wasn't going to stick around for long. And ultimately, once the rights ceased to trade, then you would find that the Sibanye share price would probably begin to perk up again. And that is what's happened. So we went long last week at 15.80 Rand, and we've got a stop loss there at 14 Rand. So it's working out okay for us. You can see the share price has perked up a little bit since then. I'm going to remain long here, and I'm looking for a move up to about 20 Rand where I'd look to bank profits here.
Were you not surprised to see it not perking up to maybe the extent that you might expect if a rights offer is almost 5 times oversubscribed, which is ultimately what it was? So despite the incredible weakness, in the nil paid letters when they were trading. I was quite interested to see that it was so oversubscribed. Yeah. I mean, the two, they had a bit of dissonance and cognitive dissonance.
Yeah, they kind of don't line up, those two. But you're right. I mean, look, the fact that it was 5 times oversubscribed is a very positive sign. So it tells you that there's plenty of appetite out there to support this capital raising, notwithstanding the fact that, yes, there was a lot of selling of the nil paid letters in the market. But I still expect that it will probably perk up from these levels, and we'll see it moving higher. It's not necessarily going to go there in a straight line, but I think last week we showed an example of Life Healthcare, which was a very similar situation about a month or two back, and the share price of Life Healthcare subsequently moved up quite nicely. And I think we'll see a similar situation play out here for Sibanye Gold.
Also, one of the elements that you've got to consider are the elements that it's investing in, and that's palladium, because palladium is the strongest performing commodity year to date. So it's unfortunate that it maybe hasn't had the same sort of impact on Sibanye, even though it doesn't actually own, I suppose, the Stillwater assets just yet, or hasn't taken ownership of them.
Yeah, look, those kind of details, I'm not 100% sure of them myself, but I just think that now that this additional pressure on the shares is out of the way in the form of the rights issue, the likelihood from here is that there's a bit of upside movement in the shares from here.
So locally things are going well, but what about offshore, Garth? This is turning out to be a bit of a bugbear for you.
Yeah, it is difficult. I've struggled on the offshore account this year. So this is a trade in Capita Group that we did a few weeks ago. And at that stage, what I'd identified was this pattern of rising lows and the series of flat tops through at £5.85. And I said to myself, that looks ripe for a breakout to the upside, which would then give further impetus to a move to the upside. And I went long of 430 CFDs at £5.85 with a stop loss at £5.50. There was a dividend paid while we've held this of 20 pence, so we earned £88 in dividends there. And then the share price was quickly bought up again after the ex-dividend, which I thought was a good sign. It then did break out above that £5.85 level, which I'd been watching. So I thought, well, that's great. It's doing what we hoped it would do. And but it very promptly came back, and it meant that this breakout through the resistance there was a false break. And often when you see a false break like that, it actually does result in a fairly violent move in the opposite direction, and that's what we've actually seen here. So based on that, I ended up cutting this trade at £5.41. Now you'll recall I had actually moved our stop loss down to £5.30 after the ex-dividend, but I just decided I wasn't happy with the trading action in this share, so I exited it at £5.41. It meant that we lost £109 after all costs and the dividend was factored into the equation. So it's about 1.1% of our capital that we lose. Just frustrating that it's another loss on the offshore account, and I really have battled to get this account into the black this year.
Yeah, well, let's show the viewers how the two portfolios stack up against each other.
Yeah, well, let's show the good news first. So the South African portfolio is looking amazing this year. And that's based purely on the fact that I'm accounting for that put spread option structure on its theoretical value, which, you can accuse me to say, well, that's not really the right way to go about it because I can't realistically bank that profit at the moment. But I'll continue to account for it week by week until the September futures close out. But if you take all of that in the ALMI future and our Sibanye position, we're actually up nearly 25% on the South African portfolio. And remember, we were only up 3% last week. So it's a huge jump. And it's looking great. Unfortunately, the offshore account not looking good. There's our Capita loss that we accounted for this week. So we're sitting with a loss there of 4.8% for the year to date, which is not too pleasing.
No. So hopefully we can sprinkle some magic on the offshore portfolio at some stage. Guys, just to wind up, a reminder that people can get a weekly alert from you.
Yes, if you go to traderscorner.co.za, you can go to the middle of the page and you'll see a link to a free weekly email there. If you click on that, you can then register and you'll receive an email from us at lunchtime every Tuesday detailing what will be coming up on the show for that week.
Great. We'll leave it there. Garth, thanks as always for joining us. Garth McKenzie is founder and editor of Traders Corner.